Hey, this is John from Bite Size VC, where we discuss and demystify venture capital from an entrepreneur's perspective. Now, I've been asked more than a handful of times this question: when should I go raise venture capital? And I would love to give you a very simple answer. The problem is there really isn't a good answer to that question. There's kind of two camps though. There's one camp that says you should only go raise when you are absolutely certain that you have a product that people want and that you're ready to go scale or to have more financial resources to go build that out. And then there are people on the other side of the camp where they're more like, always, you should always be raising.
A, B, C. A always B, B, C closing. Always be closing. Always be closing.
The challenge is there's truth to both those camps. You see, in the first camp, there's a lot of validity, a lot of value in having something that you believe in, that you've validated, that you have a product in hand that you can actually demo, because demos are the most popular form of a pitch, so to speak, rather than pitch materials. And so that's helpful because you have something that you can really validate, and you have something like physically, or at least in software terms, you have a software product that people are using or have even purchased from you, and you have real customers. And on the other side, it's, well, like, you should always be in the mode of thinking about venture and financing the company and making sure that you have those types of resources at hand. A lot of the differences are really related to personality, because what I've discovered is that as I've interfaced with many entrepreneurs and many VCs, is that there's no one right way to raise venture. In fact, there are a near infinite amount of stories where successful companies have raised venture in a myriad of ways. And so there is really no rule book. Now, there are best practices, like when you actually go and have made the decision to go raise, you should try to sequester all of your conversations or serious term sheet conversations into one particular bucket of time. Like if you can do it in a couple of weeks, great. And that makes sense because you want to spend more time on the business and the product and engineering and stuff like that. At the exact same time, it's like before you even have a product that people want, you're validating, you're building, you want to be open to those conversations all the time. It's kind of like the way that I see it is, I will always be open to having a conversation with a venture capitalist who is interested in knowing what I'm working with. Now, it is my decision in wisdom to say yes based on where I am with the product, or if I even have time. That's a big factor that you should always consider. But I will never immediately say no. I'll consider it, I'll look at my schedule, I'll see where the product and the business is, and if it's the right time, yes, we'll have a conversation. So I never want to close those doors. I never, at least principally, say that I'm not raising. I just say, hey, I'm open to having conversations. But then when I have moved into a serious fundraising season where I know I need to raise capital, and I have an established product in mind, I actually have a figure of the amount of money that I want to raise, then yeah, like I'll hit it strong. I'll email a bunch and contact a bunch of folks all at the same time and try to move people into a decision-making tree so we can get a deal done, and then I can get back to building product. That's a long-winded way of saying that there's no perfect answer to the question of when should you start raising. I think if there's any cure, or any solution set rather, it's that you need to practice. Part of this, especially from an entrepreneur's perspective, especially as a newer entrepreneur, you just are not familiar with your own style quite yet. And every VC is also equally as different. You may encounter one VC who likes this particular methodology and engagement, and then you might meet this VC who is completely the opposite. Your goal as an entrepreneur is to create something that people want, and then invite wisely the right types of people: team, co-founder, staff, venture partners, financiers, that make sense to help you build a successful company. And that just takes practice. So if anything, it's practice. Continue to have conversations, see what feels good to you. Yeah, absorb wisdom from a variety of different sources, but ultimately you decide on how you want to raise. I think that's the most important. It took me a while to figure out what is John Saddington's style of raising venture capital. And in the very beginning, I couldn't codify that. But now I feel pretty good about my particular way of engaging with VCs, engaging with other financiers. I've got my method. I've got my strategy, if you will. I've got my own playbook. And my playbook won't be your playbook. I can tell you a few things like I just have, but otherwise you're in the process of developing your own, and that's very exciting. So read as much as you want, as often as you like, with as much time as you have, but at the end of the day, you have to decide, build your own method, build your own model, build your own strategy for how you want to raise. And if that includes timetables, specific timetables for when you do it, great. Otherwise, it's up to you. So this is John for Bite Size VC. Looking forward to hanging out with you guys a little bit later on the next episode. All right,